Straight up, let's connect with Sandeep Bhatia, Executive Director and Head of Sales with Kotak Institutional Equities. Sandeep, morning. Thank you for joining us. Sandeep, it looks like a perfect storm. Greece is a disaster. France and Germany are not talking. US economic data is weak. Inflation is high. And rupee is at an all-time low.
Exactly. So, I think it's definitely been a very choppy first, from at least from Feb onwards, I think it's been extremely choppy. So I don't think things can change dramatically. I think the Greece storm is still to, still to fall on our heads. So we will see pressure on banks in Europe. We will see pressure on currencies continue. So until we see, some resolution or some kind of solution to this Greece exit, or whether the exit happens or not, and what fallout effect it has on other parts of Europe, the markets will remain extremely choppy.
Sandeep, there's an old maxim in the market that good bargains and great news that never comes together. At these levels, do you think there are enough bargains available, and for a patient investor, this is a good time to shop and pick up some bargains?
Yeah, valuations have come off, but it's a bifurcated market. There are valuations which are still very high in the consumer sector and so on. All cash generating companies have significantly high, valuations in the region of 25 times earnings and above. And the cash guzzling companies have very low valuations. So I don't think, it's come to a place that we have uniform cheap valuations. But I would think that if you look at the tech sector, maybe something like Satyam looks interesting, something like, Infosys can look interesting from a 2-year horizon. So those businesses look good. If you look at even Reliance at these levels at 700, if you take a 2-year perspective, that would look interesting. We could easily see a 25% kind of returns over the next 2 years. But does that mean that this is the stocks can't fall from here? That's not the case. You have to buy these stocks and still be ready for a 10-15% downside.
Sandeep, of course, the one factor which has been impacting the market mood is the currency depreciation. So far, the RBI's attempts haven't quite had an impact on the currency. I mean, how much more weakness can we see in the rupee? Because that is really damaging some of the corporate growth stories as well.
Someone answer the question how much more macroeconomic weakness we'll see, and I can answer the question how much more weakness in rupee we'll see. So it's all interconnected, honestly. And who knew that this is the kind of this is the place we will find ourselves in February. Everyone was going rah-rah, and there was cheerleading the rally without even looking at the fact that the ground was falling beneath your feet. So there was nothing there to dance about, and everyone was cheering that wildly. I can only say that, continue to be cautious, continue to monitor the fact that Europe, the pulse of Europe still looks very weak. Our macroeconomic pulse is not showing any signs of any improvement. The currency is just a byproduct. So, just to focus on that and try to call that one factor. If you ask me, fundamentally, I think the rupee is oversold, and it should improve from here. But whether those fundamentals kick in the next 1 month, or whether they will take another 12 months to kick in, who knows?
So, I mean, for how long do you think, Sandeep, the uncertainty about the European region, in particular Greece, is going to linger on? And does that make for a base case of further liquidity infusion by the ECB?
Yeah, I think there's only one magic wand that the whole world has, is to just print more money, and it seems that we all solve our problems and we move on. I don't think that happens, and something which I've continued to emphasize, that liquidity is just a mirage. It just keeps on. You just keep running towards it, and eventually you don't quench your thirst. So I would just say that yes, I mean, we can have one more round of liquidity easing, and we may have one more round of feel good in the markets for 2 months, and then after that, it's back to the reality, hard grind and fall. So I think the Greece situation should resolve itself by July, August, either which way. And by then, also by September, October, we will know the fallout of that on the other weaker southern periphery of Europe. So it's going to be an eventful summer to autumn in Europe, and to that extent, there would be a fallout effect on India. So, as I've ended our last conversation, flat to down markets, and that's what one should expect. That's the base case.
Sandeep, but by and large, as a trade, are you advising your clients to avoid companies which are exposed to foreign capital, are sitting on FCCBs, which are sitting on large foreign dollar-denominated loans?
Yeah, I mean, it's a no-brainer in a way. It's obvious that we have to avoid businesses which are looking to fund their balance sheets out of external borrowings, which have large external borrowings, which are going to get marked up in rupee terms when the balance sheet gets translated at the end of the quarter or the end of the year. So all these are givens, but the real issue is that, where are the cash flows in terms of operations, where are the margins moving, and whether we are going to, see a resolution of the impending uncertainties which grip policymakers. So all that is part of the course. Yes, I would definitely want to avoid any kind of dollar or euro exposure on my liability side right now.
So by and large, would you see markets or at least Indian markets will find it very difficult to go past the February high 5,500, 5,600?
Yeah, I would sell the market if it goes there. I mean, it would be a good time to get out of some sticky investments. I mean, I'm presuming that there's no other fundamental change and there's just a gush of liquidity surging through your veins. So if that's the case, then you should definitely sell. This is trying to search for a way out of a tunnel that we have landed ourselves in. So it's going to take some time.
Bull markets are always born on skepticism, and just about everyone on D Street is bearish. Sandeep, is this a good time to put money to work? There are no buyers.
We have been bearish for a very long time. So to be fair, that we have never cheered the market. And if we see an improvement in fundamentals, which I genuinely I fail to see one improvement in fundamental in terms of even a proposed action. Forget actual delivery on after that action is done. So we will definitely want to get bullish. So I think I take your point where you're coming from, that one cannot be extremely bearish. But I also want to warn you that most of the bullishness that has come through has just been following the market rather than saying that something on the ground has improved. The data still shows slowing growth. The data still shows sticky inflation, and the data still shows that policymakers are not acknowledging the fact that the reality is very bad. So once I see at least one of three of these things changing, then I would start considering the fact that one should get bullish.